Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, highly anticipated edition of the day trading program, How to Make a Living with Day Trading, module number 5, presented by Real Life Trading. I am your humble host, Jeremy Alexander Newsom, and I hope each and every one of you are doing transcendently tremendous. Woo! Good afternoon, good night, good morning. Wherever you are in the world, the sun always shines. Great to be here. Hope you are doing straight up incredible. So much goodness going on today. And just hope you're just doing overall incredible and life is going amazing and just things are as bright as could possibly be. The mission of this program is to enrich lives. The mission of my company is to enrich lives. The mission of Real Life Trading and my mission personally is to enrich lives. And we do that by guiding an epic and loving global community towards fully understanding and achieving financial freedom, whatever financial freedom means to you. There's all kinds of things it can mean, but take your definition of that. The goal of this series directly and specifically is to create a sensational tribe of consistently profitable traders who carve out monthly cash flow through day trading. Some really quick tidbits about me. The first time I became an owner, not just a consumer, is when I bought shares of Panera, PNRA. They used to be publicly traded until they were bought out by a private company. I was at college, and I realized, I was like, wait a minute, I'm sitting in a Panera. This was a few days or weeks after I traded silver and made some money on it. And I was sitting in a Panera trying to figure out what I could trade or how I could trade it, what stocks I should buy, looking around thinking to myself, wait a minute, this shouldn't be that hard. So snagged some shares of Panera for $80 a share, went all in on that one. And end up getting bought out for about $250 a share a few years later. So that was really cool. Also, I think YouTube Premium is an incredible service if you ever want it. I'm not getting paid to promote that, but man, it's like an amazing, amazing service. So much you can do with YouTube Premium, no ads, and you can download pretty much anything you want. Also, September is real estate month every year at Real Life Trading. Just a little bit of a tidbit. Every month we have new themes and new goals and new objectives. And I'll be cranking out and putting out a lot of content about real estate this month, so strap in for that. And make sure to check our YouTube channel at the beginning of each month for 3 new challenges. So every single month we have a real life and trading challenge. So the real challenge is something physical. Life is something that you can do related to the month, and trading obviously is self-explanatory. But yeah, if you are interested, feel free to subscribe to our YouTube channel, simple enough, Real Life Trading, and check out every single month. We have brand new challenges just because, again, trading is amazing, but what I love about it is life, just like in the name of the company, comes before trading. Oh yeah, give it up for the name. If you want some slides, here's the information in text and get you some slides. And here's where we are today. Brokers, margins, and your day trading plan. Of course, we'll look over some examples as well, just to make sure that you all are really comfortable. You feel like these 5 modules were worth it, worth your time investment, worth your energy, and your commitment and dedication. So again, for all those who are here live, thank you so much. I want to give a shout out to Joseph Musso for helping me. I want to give a shout out to Matt DeLong, to Robin Steckel, to Alex, to Arabia, to Dean. So many of you in the background making all this magic happen for somebody out there. So thank you all. Simon says, thank you for all the work. Absolutely. Chief says, just hearing your voice is worth being here. Man, I appreciate that, dude. Give Sue a hug for me. Miss you both. You are amazing. So the broker part, we do and did talk about this a little bit in the beginner series. So the good news is when it comes to day trading, there's nothing too outrageously wild. And the way I have these brokers set up, I've used all of these personally. I've never used these, but heard good things about them. And I know a lot of people who do use them. And these I would refer to as discount brokers. Some of them are direct access, like Lightspeed and TradeHawk. Some of them are not. I would simply say that I've never personally used any of these. I know tons and tons and tons of people who use Robinhood, but these are all brokers that you can use for day trading, every single one of them. Now, Robinhood, right? Webull, Trade Zero. These are going to be some challenging brokers because they don't have fully capable system setups. I believe Lightspeed and TradeHawk do. E-Trade, Fidelity, TradeStation, all great brokers, absolutely. I just broke them up so they weren't on one giant slab. So again, the reason I'm bringing up the whole broker thing is because every broker that I have used or known people to use or have worked with or have known people to work with, at some point in time, they slow down, they chug along, they don't work, they don't do whatever. They're just really, really lame. A few days out of the year. It happens everywhere. So I've never heard anyone that's I've been with a broker my entire life and they've never had one single update right in the middle of market open and I wasn't slow or nothing. There's always something that you can pick apart on a broker. And it's happening a lot with Thinkorswim and TD Ameritrade recently, and I hate it. There's a lot of brokers that have become a discount broker because they don't charge for commissions. And the way that brokers make money without charging for commissions now is by selling order flow. So in case you don't know what that is, simply put, order flow is the amount of orders going through a broker. So if a broker knows that 1 million people are buying shares of, I don't know, Carnival for $16, all right, they will sell that order to someone else saying, hey, do you want to buy the shares for $15.98 and then sell it to them for $16, right? And that's an instantaneous transaction. It happens in milliseconds, but that's pretty much what's called selling order flow. Robinhood is the top of that right now. And they make a lot of money selling order flow. And also it's selling data and information. If a market or a person like me, nasty, evil Wall Street hedge fund person or whatever, knows that a lot of people are maybe buying a bunch of stocks and I go, you know what, let's sell it right here. Let's sell everything. Let's go entirely into cash because there's too many order flows out there that are bullish. And I can look at that and go, yep, everyone is piling along. Let's go sell. That's what's called selling order flow. Every broker does it, but the ones that are free do it the most. And there's a lot of free brokers right now, and that's going to be the way that they all make money. Type into one if you did not know that. There's a lot of things out there in the market that, you know, some people might not know, but yeah, it's that's the way that a lot of these brokers are going to make money on the back end if they don't charge for commissions. Now, there's tons of things that you can do to avoid that. Some brokers, you can have what's called iceberg orders. You can do hidden orders. You can do orders in interactive brokers that you display a different size than what you're actually in. So there's all kinds of ways to kind of quote unquote relatively sneak the system if you really feel like it's necessary or needed. You by no means have to, but it can always be done, especially in interactive brokers, right? Interactive brokers, I would say, is the best day trading platform out there. So yeah, that's pretty much it. I mean, it's an amazing broker. I use it all the time. I use Thinkorswim all the time. I've used Tastyworks. My boy Tom Sosnoff, one of my trading mentors, he helped create Tastyworks. Charles Schwab is about to own Thinkorswim and or TD Ameritrade. I'm not exactly sure how that's going to work in the future anyway, but that's going to happen. And Charles Schwab, solid broker. So these are the four that I've used and I have the most money in. This one over here, I've, you know, never personally used, but I don't have any money there either. And over here, you know, I know some people have used those. But anyway, all these brokers can be used for day trading. This one, in my opinion, is the best on this particular list. Now, I have a really, really good friend named David who uses TradeHawk. I have another good friend named Felicia who uses Lightspeed. I know a few people who do all kinds of stuff. Pick which one you want. It's kind of like a restaurant. At some point, you just got to go and either get a steak or whatever. Jay says Webull allows pre and post market trades. Very cool. So does Interactive Brokers. All right. So again, the challenge of brokers, as I mentioned, they all work, just not all the time. Every broker has weird aspects, and none of them are specifically perfect. And one of the rules that I have in my trading plan is when I have technical glitches or freezes or crashes or some type of weird update, especially right around market open. Yes, it does frustrate me. Yes, it's annoying. And I usually just take that day off and don't do anything. So that's realistically it. I'll just kind of part ways and that's that. And I move on and just kind of lock it down and don't do much, because I feel like when I am impeded by the technology, as basic and first world problems as it sounds, I go, well, if the internet's not working or the technology crashes or my computer's freezing or whatever, I just don't trade that day because I know that I'm emotionally compromised. Make sense? So yeah, Simon says all trading works, just not all the time, even the broker. Exactly. Exactly. So it's just one of those things, you know? It's kind of like your car. I mean, you could have an amazing car, but you might get a flat tire one day. And you got to stop. I mean, you can have the coolest car, but if you have 3 tires, it's not the greatest of cars anymore. Chief says, oh, those emotions. I know, man. I know. David says, not to mention the internet. Yep. So, you know, if you have internet problems, your internet crashes, so you guys get the point. Brett says, the difference is when brokers accept responsibility instead of blaming it on the consumer. Sure. I mean, that's amazing if that ever happens. It's very rare. I mean, I would say all those brokers, it depends on how much money you have in your account, how long you've been trading, and how nice you are as to what they'll actually give you. But I mean, it's just one of those things, guys. So brokers are, you need them to trade. I don't know any other way to trade. So if you guys find another way to trade without needing brokers, let me know. Now, most of those brokers that I mentioned on slide 1 do have a paper trading account. If you have children, and I mentioned this in the kids class, all of you guys know that I have kid classes, right? I talk about a company called Wall Street Survivor. It's the site I first started out on. It's totally free, totally virtual, really, really easy to use, and tons of kids use it. Great place to start out in a virtual paper account if you want to. I do suggest, even if it's for a week, paper trading, just so you understand the buttons on a broker. So you understand the buttons. I would suggest paper trading so you know what buying and selling, shorting and, you know, buying to cover, limits, stop limits, market, drag and drop, data feeds. Do you pay for data? Do you not pay for data? All those things. I suggest doing paper trading for at least a month, week, something. Or just play very, very, very small size, like 1 to 10 shares for the first week. Now, obviously 10 shares on Amazon is not small size, but you guys get what I'm saying. Okay. I mean, you could literally open up an account and just trade 1 share of Amazon every day up and down and make hundreds of dollars a month. You know, Amazon moves like a banshee up and down. So you could just buy 1 share or sell 1 share of Amazon, have a $6,000 account, you know, and do 1 share every 2 or 3 days and do just fine. But you definitely want to make sure you are pressing the right buttons. Also, I don't think he's here in class right now, and I don't know if he's going to watch this video, but shout out to my boy Anthony Jones making his first 100% return on an option trade today. He's only been trading really actively for about 1.5 years, and him and his wife Felicia, we all went to Dubai together a few months ago and traded, and that was a really incredible time. So anyway, my boy AJ, well done, man. Way to crush it. Nicely done. So make sure you push the right buttons, right? You need to be very, very, please be well-versed on this. If you need to make flashcards, fine. If you need to have your kids drill you and practice and help you understand what limits and buys and stops and stop limits and stop market, you need to understand to be very, very fluid. They never change. It's like the accelerator, the brake, the clutch, the windshield wipers, right? The headlights on a car, you need to understand the mechanics of this stuff. It doesn't change once you learn it, right? You're buying at the ask if you buy a market, you're selling at the bid if you sell a market. You need to understand the bid ask, you need to understand mid price, you need to really practice all of that. And one thing I absolutely suggest is read your orders aloud for the first few weeks or forever, however long you want to do it. Even if you're day trading, you're thinking, oh, if I don't get in, I'm not fast enough, I'm going to miss the trade. That's okay. Read your order aloud for the first few weeks because you should eliminate 100% of your basic human errors with a lot of practice. Now, I'm not saying you're never going to make a mistake. I'm not talking about like getting in at the trade the wrong time. I'm saying buying instead of selling, buying a call instead of buying a put, whatever. Read the order aloud. That should be a rule. Antoine says, is it not smart to use a third-party site like TradingView to make trades? I would not agree with that statement. You can use tons of charting softwares that directly have an API interface into brokers. Why not? TradingView, TC2000, NinjaTrader, Sierra Charts, tons of third-party softwares that link up directly to brokers through an API and place trades for you. So I would not say that at all. JS says, is it broker or market specific that you cannot set a limit sell order below the ask? Just asking for a friend. Stop loss would become a market order, but target order cannot be lower between the bid and the ask. Stop loss would become a market order, but target order cannot be lower. What broker do you use, JS? You have to be in Canada. Ah, he is in Canada. Knew it. You use Questrade. Aha! You're the worst broker of all time. I knew it. I was like, JS is about to tell me he uses Questrade. Bro, was Questrade even on that list? Not even here. Dude, Questrade is garbage. Absolutely deplorable. One of the worst brokers I've ever heard of. Move your money immediately. They suck. Interactive Brokers works great in Canada. So does TD Ameritrade. I mean, literally, it's called Toronto Dominion Bank, as you know. So it works fine with Canada. Yeah, man. Questrade, garbage platform. Absolutely horrific. Worst I've ever heard of in my life. Yeah, man. So there's the answer to your question. Yeah. Sorry, Questrade. You're not getting my endorsement. All right. So make sure to do this, by the way. One of the things, if I work with an older trader in person, so I have had a lot of in-person coaching sessions where someone will come to Nashville and we'll work together for a week or something. It's obviously not for the faint of heart, and it's obviously not for someone who is just piddling around with $4,000 in the market. If you really, really want to do something insane and intense, you can work with me for a week. But one of the things I do for some of my either A, older traders, or B, newer traders, is we do a lot of timing drills. So to give you an example, one of the gentlemen that I've worked with named Greg Gilbert is now one of my best friends and just an incredible person and a phenomenal motivator inside the real life trading community and just his community in general. But Greg Gilbert and I sat down, and he was brand new to the markets. We opened an Interactive Brokers account, put some money in there. And I was like, all right, man, let's go through 15 setups right now. And you got to buy this stock, set a stop loss, set a target, set your entry, and do 15 setups in under a minute. Go. And just sat there and I timed him with my phone or stopwatch and just had him just practice and practice and practice. Do timing drills so that you can navigate and or investigate hotkeys. Most good brokers do have hotkeys. John says, I have used virtual brokers. They may be worse than Questrade. Oh, that's terrible. Tyler says, any good resource to learn hotkeys? Yep, YouTube. YouTube's a great resource. Also, call the broker themselves and have the broker. Most brokers have a trade department, trade desk team that can help you. They'll do screen share with you. They'll help you learn hotkeys. PDFs, if you like reading PDFs. Or contact someone that you know that uses that broker and have them help you understand it. That's what I do. If I don't understand something, I just get someone who already does it and I pay them some money and I go, please teach me how to do this. You know, so yeah, either way. But I don't personally use hotkeys, mostly because I'm too impulsive. I know my weaknesses, right? I know my weaknesses. I'll see a trade like, I'm getting in, boom. So I have to have tons of rules that limit me from being, you know, the impulsive ninja of the market, because usually it doesn't end well. If I'm just, every trade I see, I'm just getting in and buying and selling every candle. And yeah, so I don't personally use hotkeys to keep myself from that. Jay says, Greg was great during the moderator challenge. Yeah, man, he was phenomenal. Phenomenal energy. Love that dude so much. I'm so stoked to see what he can do in the next year or so of his growth. Brett Glover says, it may sound trivial, but it's important. I put a limit order in on Thinkorswim today, but accidentally did it at or below instead of at or above. Fortunately, caught it fast enough for a very small loss. No, man, that doesn't sound trivial at all. That's exactly the point of this class, exactly the point of me like hounding on this stuff. And you are absolutely right. Yeah, man, I'm with you. I think that there are so many ways to have those small human errors. And dude, I absolutely get it. It is so frustrating when it happens because you miss out on the move and you get all flustered and whatever. Just practice it, slow it down, do drills, man. That helps a lot. Every other profession that I knew, they do drills. You know, anyone who does basketball, they still shoot free throws. Anyone I know who, I mean, insert any sport, they always do drills. David says, does Interactive Brokers run on a Mac? Bro, would I recommend it if it didn't run on a Mac, David? Come on, man. You know I'm a Mac fan, bro. I'm an Apple fanboy. So yeah, definitely runs on a Mac. If something doesn't run on a Mac, I don't talk to them, promote them, or like them, or use them. So, yeah, man, you a Mac fan too, huh? Thomas Wong says, at least Interactive Brokers, Thinkorswim, and TradeStation have so many features. Oh, yeah. They are jam-packed. IB, TOS, and TradeStation can more or less, if you want to do it, you can do it. Interactive Brokers, I know for sure, can do so many things. It's bananas. Sheer banana town, the amount of things that IB can actually do. Mike says, I now type all my orders in too, no hotkeys. When I used to trade pennies, I used a broker that had hotkeys and it blew up my account. Oh yeah, I've been there, man. Cabria says, I tried to place a pre-market order for Tesla at 388, but it didn't work for some reason with Fidelity. But I ended up doing a limit day market order at 375 and it made me some good money. I would assume, Cabria, that you just didn't have your pre-market selection turned on, would be my guess. Probably it. And Interactive Brokers, which we'll talk about tonight, I'll show you some screens on it. You can just click a button and just, you know, you can fill after hours if you want. Yeah. All right, cool deal. So here's a question. Should you use margin when you day trade? Now, here's a cool thing about margin and day trading. You're in cash at the end of every day when you have a day trading account. Or, you know, whatever you might be day trading with. I mean, when you're day trading, it is supposed to be a day trade, right? That's a super amazing thing. So we discussed the R system and we discussed the R strategy. So technically, it doesn't matter how much money you have, but when you are day trading, most, at least US brokers that I have used personally, offer you 1 to 4 margin on your day trades. 1 to 4. So you might log into an account. You might log into an account and you deposit $30,000 and then one day it says you have $120,000 of buying power, right? So That's pretty cool. I mean, that's 1 to 4, but don't think you can go spend $120,000 on stock because you'll be in a lot of trouble. Swing trade margin is only 60,000, right? So it's 1 to 2. We'll talk about that in just a moment. But the day trading margin is amazing, right? 1 to 4 margin. I think that's amazing. And that's phenomenal. Are you kidding me? 1 to 4? That is so good. I just like that because if you're trying to trade an account and you have a $30,000 account, nope, you have $120,000 of buying power. So eventually, let's say over the course of 5 or 6 months, you take a $30,000 account, you turn it up to 33. You're like, you know what? I feel pretty comfortable about this. Let me withdraw 2,000, pay myself, like Newsom says to do. I have 31, and instead of using a $100 R, now I'm going to bump it up to 200. Right? And same thing, you take a $200 R and you trade for a few months, and that 31,000 that you had goes up to 34,000. You take $2,000 out, pay yourself, your account's at 32,000 now, and now you increase your R to 300. And again, just rinse and repeat this process over and over and over. So bottom line is, absolutely, if you are day trading and you have risk parameters, risk control, and you understand the math of risk, why not use the margin? Right? So want to hear something wild? I mean, that's pretty amazing in my opinion, but here's something really, really wild. Type in a 1 if you want to hear something crazy town. Just it'll blow your mind. There's companies out there that will offer what's called propped leverage, proprietary leverage trading. There are plenty of brokers, not plenty, sorry, there are brokers and companies that will give you 1 to 20 leverage on your day trades. So that means if you put in $50,000, you actually get $1 million of buying power. Woo-wee! Come on now. You tell me I'm going to get 1 to 20. Good Jesus Christ. I'm so excited about that. Now, again, the thing is, if you know your risk, it can be okay. Shalou says, how does Interactive Brokers know it's a day trade? So the thing is, there's 2 things. You get the money, and if you use it, it's automatically a day trade. They're just assuming it's a day trade. But if you go into the next day with all of that 1 to 4 margin tied up, guess who's getting a phone call? Guess who's going to get a wrap on your email, and you're going to get a margin call. So Interactive Brokers doesn't know that it's a day trade, but you better know it's a day trade. Because if you hold that four times margin overnight, trust me, you're going to get a call. Yep. They'll let you know. And sometimes they will auto liquidate your positions. Better read those broker statements really carefully. If you're like, nah, they're not going to auto liquidate. Oh, you did not trade through COVID then. I saw plenty of people get liquidated. Because remember, when you're doing margin and you're doing swing trade margin, keep this in mind. If you have, Andre says, you're not supposed to swing trade margin. I swing trade margin all the time, man. So again, guys, margin is a tool, but day trade margin is 1 to 4. Swing trade margin is 1 to 2. Okay. So when you're day trading a margin, this 1 to 4 margin, if you take a $30,000 account and you put $120,000 in, how much money should you sell of that position or whatever between now and market close? You guys are very good at math, right? You should sell at least $60,000 of that so you can go back to your regular margin account. If you don't, the broker can either A, auto liquidate your positions, or B, give you margin call and force you to put more cash in there, or C, close out your account. But yeah, I swing trade on margin all the time. The thing that you got to understand with margin is if you have a $30,000 account, and let's say you're in $50,000 of margin, okay? So your actual total shares and everything that you're in is 50K. And the stock drops, the market drops, 10%. Right? And so this goes down. What really happens is when this thing goes down to 45,000 in total, just as an example, when you have a massive drop like that, this also goes down double. So this is not like it's going down 3,000. It's like, no. This is your balance. That's how many shares you have. So if you have a bunch of shares, a bunch of things, all the equity is going down. It's not just what you're borrowing. The whole thing is going down. And when the whole balance goes down, it's very easy to get a margin call if you're not very careful, because you need to have what's called maintenance margin. So I love using margin. You just have to have your risk control. That's why I suggest generally using 1% or less and not having too many swing trades open. But again, swing trades are in and out, right? Pinging and ponging, boom, boom, boom. You're moving on. You can easily sell. If you have, again, let's just say $100,000 account and you're invested and you have $200,000 of margin, right? That's the entire margin that you get, and you have $180,000 invested, right? $180,000. $80,000 of that is their money. It's not yours. So you're borrowing that. So if this goes down, not only are you losing some of your money, but you're also losing some of their money. And if some of the stock that you own, some stocks have their own margin requirements. Like Tesla has a pretty high margin requirement. Some other stocks, because of the volatility, the broker knows these things can go really high, really far up or down. The maintenance margin, Michael, is how much cushion that you need to have open before you're going to get a margin call. So each broker has their own maintenance margin requirements and their own percentages of how far that can go before you either A, have to sell your positions and get out of them, right? Or how much it has to go down before you're going to start putting your money in. But it's a certain cushion, it's a certain barrier, because as the market, or if the market starts going down and you start losing on your margin, if this number starts dropping, this number starts dropping as well. But the very important reason that that's extremely crucial is if your $100,000 becomes 70,000, let's say, right? Because you're making money double as double fast, right? So you're having $70,000. As it's dropping, the number that's also dropping is this one. Okay, because if you have $70,000 of actual value in your portfolio, that means the margin that you can actually use is now 140,000. And if 140,000 is less than your maintenance margin, you can get a margin call. If you're in a bunch of those positions. So make sure you keep that in mind, because yeah, absolutely. I mean, if you're in a 1 to 4 margin scenario and you're like, let's roll some dice, I want to make a bunch of money. You have a $30,000 account and you have a $120,000 trade on a position, and this $120,000 position drops 10% because you don't have a stop in place and you're being a giant bonehead. Are you losing 10% of 30,000? Ladies and gentlemen, no. You're losing 10% of 120 because that's how much money you have invested. Do you see why stops are important? Do you see why I talked about it really early on? I love margin. I use margin all the time, but you have to know the risks. Margin for day trading, in my personal opinion, is extremely acceptable and okay if you have your risk, because all you're going to lose is your percent value that you determined if you do the numbers correctly. Right? So if you're doing 1R, you're doing 1% or 2% or whatever your account is, and that's how much account, you're basing that risk off of what number? The margin number or your cash balance number? Right? You're basing that off of this number, the cash balance. So if you have to use some margin to take some day trades, that's fine. But you're using, as we talked about in class 3, the cash balance of how much you're putting in, that is your risk, and you're using the additional margin just for trades to get in, get out. So if you take a bunch of trades, let's say you take 6 trades that day and you make 2 R's, which is $600 if you have 1%, then your account balance is $30,600 for that for the next day going in. And it's all on settled funds because it's margin. That's the point of margin. Margin settles much faster than cash. So what I can say is if you ever really get bored on the weekends or at night, do a lot of research and reading on your margin requirements and how much is contained and if so and when and all that kind of good stuff. Because again, if you have an account value of whatever, 78,000 and you get a bunch of stocks in there and you're like, okay, cool. Well, I have really, let's just say about $160,000 of buying power. So you take 78,000, you really ramp it up and you're in $150,000 of positions and the market drops really, really hard. This number drops double fast. Lily says, is your R based on 30K or 100K? So in that question, Lily, which amount of money are you putting into your account? Lily says 30K. Then your R is going to be based off of 30K. Yep. So again, as a reminder, when we're talking about this, when we're talking about the wild, crazy thing of taking $50,000 and literally getting access to $1 million of day trading buying power, are you going to base your risk off of 50,000 or $1 million? Right? You're going to base your risk off of 50,000, and you're probably going to use a relatively small percentage, and you really probably wouldn't ever use all that million unless you really wanted to, but it's just important to know. Antoine says, so you should trade every trade like you have 30,000, just give the extra cushion, just use the extra cushion given by the broker. Yeah, exactly. Absolutely. Whatever your cash balance is, that's how much you should trade like you have. And if you go over, that's okay. The broker has that money available to use, but just make sure that you know, is it a swing trade or a day trade? If it's a day trade, exit. And if it's a swing trade, just make sure you have your stops in place and that you're ready to go and you're okay to be in it. Yeah, because it works both ways. It's a double-edged sword for sure. Now, the reason I'm bringing all this up is day trading is amazing. Margin's really, really cool. But for your long-term accounts, most of your long-term accounts do not have margin, as you probably have noticed. And that's good because your long-term accounts should kind of be there for safety and security and generational wealth and all that kind of good stuff. Day trading is for bill paying, cash flow creation. I want to go to Montana for 2 weeks. It's going to cost $6,000. Let me try to make 6 hours day trading, or 7 or 8 or 9 to pay the taxes or whatever. I mean, like, have that goal, have that approach, have that thought, and go out and create the income. Daniel says, it looks like Interactive Brokers' margin rate is really low compared to the other brokers. Staggeringly low. Yep, you're correct. Staggering. So when I talk about the whole $50,000, this is one example when I talk about money grows on trees. When people are like, oh, I don't have enough money to do whatever. It's like, yeah, you do. If you got $6,000, it's like, really, you actually have $12,000, technically. Technically, when you're swing trading, if you have 6,000, you really have 12. So you could use, instead of 6, you could use $7,000 and take $7,000 and buy a nice dip on a company like, oh, I don't know, Tesla or Apple or something. Buy it nice and low. So buy $2,000 at a time, $2,000, $2,000, $2,000, and then another $1,000. Leg into that position, and that's all that you use is $1,000 of margin. And then if the stock bounces and it trades higher, and you make $9,000 on that trade, you sell it, you've made $3,000. Like, that's extremely possible. That's doable. So again, money does grow on trees. Like, that's that concept. You don't have to think. If you're sitting there and you get stressed out one day about money, you have to realize that that's probably not the issue that you have. Most likely it's not. Brett says, in your opinion, is it better to have cash to trade options to avoid pattern day trading or have a margin account to be able to sell spreads? 2 different questions, 2 different strategies, my friend. Is it better to have a cash account to trade options to avoid pattern day trading rules? If you're trading options and your account is less than $25,000, then yes, you want to have a cash account because options are generally not that expensive. And as long as you keep track of your cash balance and you can be relatively flexible and nimble and trade lower price options, sure. So if you have a $16,000 account and you want to day trade options, which again is like the hardest thing in the world that you can possibly do in trading. It's the #1 most difficult thing you can possibly attempt. You want to day trade options. It's like, okay, if that's cash, so no margin, and you take 4 trades in a day and those 4 trades are $5,000, it's like, well, you have $11,000 of cash that you can use the next day. And if you use all $11,000 the next day, then you shouldn't trade at all the next day because cash sometimes usually has a 2-day settlement period. Moy says, I thought you needed margin to trade options. No, not at all. You can trade anything you want on cash. Cash will buy you anything you ever want, always. If you want it and you have cash, you can buy it. Now, margin is required to do certain option selling. So Brett mentioned credit spreads. So you do need margin to do that, right? So to sell certain types of options like credit spreads and other types of option strategies, you do need margin to do some, but in order to buy options, you do not need margin. Any other questions about that, my friends, while we're here? I mean, this is a really, really good discussion. Super good discussion. I love it. Simon says, and it's important. Yeah, definitely. Definitely important. Okay, so what we'll do is we'll do this really quick. What I'll do is I'll show you two trade setups. So just give me a quick moment to bring some of this over. Okay. Give me just a few seconds. I got to change screens and everything, and it's just like it's a whole process. Okay. Exit out of that. All right, give me just a quick moment. It's not going to be as fast as I want to be, but that's okay. All right. Perfect. Bring that over there and bring this over here. That is so funny how I can't change screens with Thinkorswim. I have not figured out why I can't do that. I'll be able to cut this out and post edit. All right. Detach. Okay. All right. So I can detach it and bring it over. All right. Cool. Back to your normal scheduled programming. All right. So what I'm going to do is I'm going to show you, hopefully, 2 ways to approach kind of the way you want to do certain situations and certain trades in 2 different brokers. And I'll show you how you can easily automate a day trade, extremely simple, and, you know, is really, really easy. All right, so in this first one, this is Thinkorswim. Now, you can absolutely use the Active Trader tab over here. So the Active Trader tab will allow you to do all manner of trades very aggressively, very actively, very, very quick. A lot of people love using that. There's also this trade tab right here. One thing I'll do is, just as an example, let's go to Norwegian Cruise Lines, NCLH. So Norwegian Cruise Lines, does it have a 2-day pennant pattern like we're talking about in recent classes? You guys can all see my screen, right? Okay, perfect. So, yep, you got a 2-day pennant pattern. So let's just hypothetically say that I want to set up to trade this as a day trade. If it gapped up above 1950 and I want to buy it at 19 with my stop at 18, I can set this all up in advance. So what I'll do is I'll come to the chart, right click, go to buy custom OCO bracket. Now I am recording this. We'll go a little bit faster. You can watch this on the recording, but it's really, really simple. Again, all I'm doing is clicking the chart, buy custom OCO bracket, boom. All right, I do actually have an order set up already on Norwegian on some options. Okay, so what I now do is this is the OCO bracket, which means it has a order to buy, an order to sell, either a stop or and a target. And if the target's hit, then it will cancel the stop, and if the stop's hit, it will cancel the target. So again, very simple, 2 buttons, and then bang, I come down here and I can fill out the order. So check it out. If I wanted to buy some shares of Norwegian, but only if Norwegian hit $19, why can't I change this at all? There we go. No. Toggle on to fix order price. Toggle off to allow to configure market changes. I've never not been able to do that. How come I can't click that button? Does anyone know? That's really weird. I had to detach it and put it on an entirely different screen. I promise it's really not this hard. Huh. Thomas says, which button? I literally can't select the limit button. I'm trying to change limit to stop market, or sorry, stop limit. Weird. None of my buttons can click. I can't change anything. Oh, of course I can change the quantity, but I can't change the order type. All right, let's just try this again. All right, buy custom OCO bracket. That is banana town. I can literally not select anything other than the order quantity. It's unusual. You see what I'm saying about the whole process? Okay. Whatever. No big deal. All good. So what I'll do is I'll just do a limit order. I'll just do it as it is. But here's what I'm trying to get. What you can do is you can change this to a stop limit price, right? You can change it to a stop limit, and you can make $19 the stop, which means unless the order hits 19, the order won't go live. But if Norwegian gapped up, let's say Norwegian gapped up on Tuesday and it hit 19 and then sold down, I could then do a limit order of $18.50 to buy, and then I could have a stop loss at $17.50. Maybe because I can update these buttons work. Yeah. Okay, so I could do $17.50. And if I want to sell at $20.50, right? So I should be able to change this order. I don't really know why I can't. I can't even change the good till cancel button. So I'm not really sure what's happening, but it's okay. So again, I could change this to a stop limit, right? Have 2 different prices, 1 stop, 1 limit. So the stop would be 19, and then the limit would be $18.50. So it's only if the order gets to $18.50, somehow that just changed. The stop would be, as I mentioned, $17.50, and the limit sell would be $20.50. But what happens is I can now walk away from this chart. I could almost set up a day trade, totally ready to go, 100% before, like on the weekend. I could set this trade up if Thinkorswim allowed me. And I could say, all right, if it hits 19, I'll get, the order will go open. If it comes back to 18.50, which is the high of the day, I'll buy, stop at 17.50, target at 20.50, and I can literally walk away and I'm done. How cool is that? I mean, that is pretty interesting, even though I can't actually press the buttons to send the order, and that's really, really strange. Isn't that pretty nifty? Yeah, it's not bad. JS says, and whichever gets tripped off first cancels the other. Exactly. So if the stop gets hit and I lose an R, then, you know, cool. And then it cancels the limit sell. And then once the order is placed, just like you can see here on the screen on that 23 contracts that I have for Norwegian to sell it, I can drag it up or down to change my order as I see fit. So I can drag it up or down once the orders are in place to either, increase the stop or lower the target or whatever. GS says Quest Trade cannot do that. No. That's why you gotta get out of Quest Trade. That's already been made very clear. Brett says, is that functionality on T-Mobile as well? I believe so, yeah. And Terry, I can't update the day order either. I can't update these two buttons. I have no idea why. Everything else works other than the limit and these buttons. I'm not totally sure why that is. So riddle me that. I don't know. Lily says, I think you cannot do market since it's closed. No, I can set it up. I'm not doing a market. I'm doing a limit order. It's not even a market. That's the point. This symbol above the day allows you to pre-select everything already. So if you want to update everything instantly, you click the paperclip and it pre-fills everything that's below it. So if you want to make all of them get to cancel immediately, or you want to update all the shares, you click the little paperclip and that'll be that. Yep. Now, for those watching this video, Thomas, what is your email that you want people to email you if they have if they want to schedule a Thinkorswim walkthrough? So what we'll do is I have a gentleman who is here who is a Thinkorswim expert. I'm really good at Thinkorswim, but this dude is like levels beyond me. If you want to schedule a session with him, he does charge for a session. It's really not much at all. It's very, very economical. But if you like Thinkorswim, you're using Thinkorswim, you plan on using Thinkorswim, and you want someone to really walk you through it, Thomas is going to send out the Calendly link right now, and this is what it looks like. So I'll click it. And so if you want to schedule a session with him, I will put that in the show notes so that anyone who's watching this video can reach out to Thomas and schedule with him if you want. It's extremely, extremely good. $75 for an hour, and he'll walk you through Thinkorswim, right? So I don't know exactly what key is stuck on my keyboard, but something is making it not happen. But anyway, long story short, you can do all of that. Let's now see if you can also do it in Interactive Brokers and see if Interactive Brokers will work. All right, so let's say I want to set up a trade on CrowdStrike. All right, so I set up a trade on CrowdStrike, and I want to, let's pull up a chart on CrowdStrike. Let's do, 5-minute candles will work. Okay. So on CrowdStrike, I want to short it at 135. All right, limit price. I want to get in short at 135. And this is good till cancel. So I can do Interactive Brokers just fine. And then I can click advanced, and then I go to attach stop loss. I come over here and click on profit taker, and I can make a stop loss of, let's just say 140, and I can do my target of 115, and boom, submit the order, and it's ready to go. That could be a live order, ready to rock and roll. I can just submit it, and it's off to the races. So again, it would have an entry, it would have a stop, and it would have a target. I can click submit. It could be a day trade, it could be a swing trade, doesn't matter. It could be options, it could be all kinds of things. If I want to leave it good till cancel, I can. If I want to fill outside of regular trading hours, boom, I click on that. If I want to do it as the market's open, I can click on that. There's all kinds of orders you can do in Interactive Brokers. If you want to get really, really advanced, you can click down here and set up all kinds of other orders like market on close, limit on close, all that kind of good stuff. Howell says, how do you take a partial? Easy. Once the order is placed, you come down here and just change the quantity. Navigating away, that's fine. So once the order is placed, you just come down here and change the quantity when you have an order set up, and that's it. JS says, is an OCO? Yep, it's an OCO order. So again, if you want to come down here and change the quantity, just click on it, change the quantity, and boom, that'll be it. So you take the partial, update your target, and then once the partial gets filled, you just go in there and plug and play, and you're good to go. That's really, really basically, I mean, if you're using Interactive Brokers or Thinkorswim, those two things are extremely useful. Jay says, what are IB fees? Extremely minimal. And they have phenomenal, phenomenal short capabilities too. Really, really good short capabilities. So their fees are like, I think it's $1 a share. Sorry, $1 a share. $1 a trade. Terry says, is it cheaper than Thinkorswim? Thinkorswim is technically free, but they charge $1 per contract. Robert says, just in a separate order on IB, it won't break your bracket. Then you can update the share size. Yep, you can do that as well for partials. All kinds of things you can do. Daniel says, can you show us how to sell 10% of your shares at your first target level? I just did that, Daniel, just literally a few moments ago. If you have an order that's set up here as a bracket, I gotta put something that won't fill right now. 300 quantity, profit taker, 299. Okay, cool. Submit. That should work. Okay. And so you have this setup, right? Do you guys all see how it has quantity right here? This is your, where I'm trying to get in and buy. This is the stop loss and this is the target. So it's a $1 stop on Tesla. If I want to update my target, I literally just come in here and I can just update this quantity. Dismiss. Is it only if the order is open? I think the order has to fill and I can update that quantity. So if this order, the limit fills, once that order fills, I can just go in and change this quantity by literally selecting on it, coming into here, changing the quantity, and that's it. That's all you have to do. So it could be a 10%, 25%, whatever your position is. Once the order fills, you go into either the stop or the target, change the quantity, or you can go in and set up a whole separate order, like Robert was saying. So this is your 13, 13, 13. You can go in and sell one share at another price, and then you go in and update and modify that to 12. Right? Super easy. Good question. Any other questions, ladies and gentlemen? And again, Thomas is getting better at Interactive Brokers, he says, and TradeStation. They're really, really good platforms, and they're pretty easy to use. But realistically, all you have to do is you can go in and set up your OCO orders and get everything created and crafted, and it can make it easier for you, and it doesn't have to be extremely strenuous. So what we need to talk about now is the plan. You got to talk about the plan. You got to have a day trade plan, some type of plan. So what you need to do is have a strategy to focus on. You should have examples of what you're looking for, as in like actual charts, AKA actual images. So as you're building your plan, in your plan, you should say, I'm looking for this. This is what I want to do. This is what I want to see. This is what I'm interested in. This is how I'm going to trade it. And then you have rule-based systems on what you will do, why you will do it, and that is what you're going to tweak and adjust over time, right? The strategy, of course, you'll tweak and adjust over time as you've done it more and more and more. The examples will tweak over time. This will all adjust. Remember, if you create a plan, you're not technically getting married to someone and it's now till death do you part. It is simply what you're initially building out. You have some rules, and then you get to determine, find out, and figure out for yourself, are you going to follow those rules or not? So let me show you how easy this is to build a plan. Type in a 1 if you're excited about building a plan. Because you guys all know I'm not going to let you go through an entire program of anything without building a plan. So here we go. Here is some rules. This is an example. Here's a strategy rule, okay? So number 1, only focus on bullish retest gaps. I put 4 into the chat pane if you can see that very clearly. So that would be your strategy. That's what you do. That's all you do. What if it's gapping down, Newsom? Then I'm sorry. You're going to have to miss that trade. What if it's a gap and go up? I'm sorry, you missed it. So if you pick, I'm only focusing on bullish retest gaps. As you know, that could be almost pretty much anything. That could be gap down fades. That could be 2-day pennant patterns. That could be just AMD. I only trade AMD, right? It could be anything. You got to put something there. What is it that you're focusing on? What is it that you're doing? What is it that you're going to implement and really become a master at? And then you have some rules, focus on that particular strategy. So, all right, what am I doing? Cool, I got it. I'm focusing on 5 stocks every single day for 5 months. Those 5 stocks are blah, 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 blah. Awesome. So now that we know what you're doing, how are you doing it? All right, so these rules are the how. So you got what you're doing. Now you have the gap must be clearing the resistance of at least 5 days. Is that clear in your opinion? Super clear. What if it's gapping up only 4 days? Then don't trade it. If it's clearing the high of 5 days, play it. Gap should be less than 10%. Pretty clear rule. Here's another rule. This is simply put, if the market is at an all-time high, wait for the trap and then get in. What the heck does that mean? Again, I'll talk about it, but you can go through and create some images. So a trap could be you're waiting for some type of lower shadow, some type of hammer, some type of wick below support, someone that's trapped, bears, bulls, wait for a trap, and then you get in if the market's at an all-time high. What if the market's had a really good pullback and we're down 20%? Awesome. This strategy is going to work great. So again, if the market's at an all-time high, wait for the trap, right? Wait for that wick to come in, wait for all the stops to get run, whatever, and then get in. 95% of my trades should be after the first 20 minutes. So that gives you some flexibility. If you take 2 trades a month out of 25 trades, that was that 90%? Yeah, so maybe a little bit more. But you do the math and figure out, okay, I'll allow some of my trades to be early in the morning, but most of them are going to be after the first 20 minutes. And then, of course, focus on buying low or taking the breakout of multiple bear candles. Avoid taking breakouts of high of day or pre-market. So avoid taking breakouts of high of day or pre-market high. Is that a very clear and concise rule? So you want to get in, right? Focus on buying low. So you want to be in before it's breaking out of the high if it's a bullish retest gap. Now, would some of these rules change if it was a bear gap down fade and that's all you're doing? Absolutely. Unfortunately, I couldn't and I can't really build a plan for every single strategy that exists in this class or really any class. If you do want to build a plan with me, I will absolutely, without question, work with you. We can do some coaching, whatever you want. But it is really, really crucial to just know how to create rule-based information on your strategies. And I can help you give those rules. You can come up with those rules yourself, but you do need rules based on what is it you're doing, some type of classification to know if you're doing it right or not. You need some very quantitative rules. Quantitative, right? Bang, that's a quantitative. Bang, quantitative. Bang, quantitative. Bang, quantitative. Right? Qualitative. It's the only thing I learned in school, the difference between qualitative and quantitative. I'm really proud of myself. All right. Any questions about this one so far? Brett says, do you have a general rule for a gap down on a ticker and an uptrend? I have tons, man. Tons of general rules. So the answer is yes. All right, so this will be another example. So now you have, again, some more rules. No more than 3 trades at once. If I'm in 2 trades at once, and again, folks, if you want to steal this exact plan and use it for your trading, go for it. but no more than 3 trades at once. If I'm in 2 trades at once in the same direction and both are losing simultaneously, and then both go profitable, even if it's small wins on both, exit and take the wins on both. That rule this year, I think, has helped me make at least 14 Rs. Just that one rule. Stacking wood like a chipmunk. And chipmunks don't even chip wood. All right, another really cool rule. If the stock makes a new high, Lily says, are you on page 13? I don't think so. So if the stock makes a new high and or volume spikes, and you have 4+ bullish candles in a row, sell everything if up 0.8 Rs or more, and or exit a partial and trail a stop. Pretty clear strategy, or a pretty clear rule, I think. Lily says, I'm not seeing your page. Anyone else? Can you guys see the new page that am I sharing the screen right? Zoom, I hope didn't pause. Everyone can see this one? Okay. Lily, I think you might maybe need to refresh, maybe log out, log back in, I hope. But yeah, again, these are really, really good rules. These are rules I've written down, I've planned, and I've thought about specifically for this particular strategy. So these are not just generically created rules. I think they're quite useful. This is a great one. And again, I'm going to go through some examples of this in a moment. But if the first 5-minute candle is bullish, and within the next 25 minutes, the market closes below that 5-minute candle, wait for the stock to get back above all of its moving averages on extended and non-extended hours before getting in long. Mind-blowing rule right there. Such a good one. We talked about moving averages in the last class. David says, love that rule. Oh, it's so good. So good. We'll do some examples of all this. We'll really tie all this together. I'll kind of show you one for each one. So let's go review examples right now for each one of those. Remember, reach out to Thomas Wrong for Thinkorswim coaching. It's very good. All right. So now I got the hard challenge of finding a bullish retest gap today. If not, I'll just go back in the past. Gap ups. Oh, we had a few. Oh, LMPX was an amazing gap today. Look at that gap and go. That was a swing trade we took too. That's not a retest gap. That's a bullish gap and go. But we can still look at this candle right here on September 1st, which was a retest gap. Daniel says, how do you quickly know if you're up 0.8 Rs? Just a visual thing? I always have to bring out the calculator. Bring out the calculator, man. Bring it out. Protein shake. All the things you can do. Ralph Lauren. Okay, so Ralph Lauren's going just a review. Number one, did the open of today open above the high of at least 5 days? You guys are saying yes. Answer is definitely no. High of this candle is here. Open is right here. So the high of the candle was 74.62. Open is 74.51. So it did not open. Not only did it not open above the high of yesterday, but it did not open above the high. This one did. This one, and that's probably what you guys are asking about. So I should have clarified. That's my bad. So let's go look at the one from yesterday, which is the one you guys were all looking at. I was looking at. You guys are like, what is he talking about? Is this guy an idiot? Mike says, I mark my R target levels on the chart before entering the trade. It helps when you need to make a quick decision. Yeah, that's a good one. So yeah, let's look at yesterday. Yesterday is a really good example. Okay, so 3-minute chart, replay. Okay. So 3-minute chart, replay. Here's Ralph Lauren. So bullish retest gap. If we're looking at our examples, has a trap happened yet? And are we still in the first 20 minutes of the day? So no trap. And we're Still in the first 20 minutes of the day. Okay, so we'll keep waiting. Right, still in the first 20 minutes. That was a nice little breakout right there. But again, we just said that we don't want to take a breakout of high of day. That would have been a breakout of the high of the day. Okay, we're also buying high, not really buying low. That's what we want to focus on with the retest gap. Okay, cool, cool. Still waiting. Now we're pulling back. All right. So now the market's been open 20 minutes. So now we're starting to watch it. Okay, do we get in right here bullish? Yes or no? Okay, you guys are all saying no. I would agree. Right? It has retest. It's done all of its things, but we're at the resistance. Are we going to do this? I have no idea. Like, none of us know. No clue. Maybe. But if we do, that would be a retest of a retest gap. And if we get some type of trap or something over here, then we'll kind of know, all right, this looks nice. And if we close below this candle here, okay, if we close below that candle, then we have to wait for it to get back above all moving averages on all time frames. So we'll look at the moving averages in just a moment. But this is literally a play-by-play of all the rules that we just built. Okay, a little bit of a double top is coming in. Nice little bear gap down. So it's going to retest and then go a little bit lower. Sideways, sideways. Okay. So at this point, market's been open almost an hour. It is retesting. It has traded sideways. Could we get in the trade like this? Okay, let's go look at the moving averages really quick. So the 3-minute chart. Yeah, we could. The only thing that I would want personally is a close above this level, and then I'll buy the pullback. The reason I want to close, there is a weird intraday gap right here. And I don't know if that's a data thing or a candle thing or a volume thing, but I'm going to wait just a little bit. Just a little bit. I want it to close, and then I'll buy the pullback. So we're still going sideways. I'm still not in. I'm still waiting. I'm still waiting. Looks like we're going a little bit lower right now. I wouldn't have gotten triggered anyway. I'm still waiting. Okay, this candle looks pretty good. Chart's looking a little bit better, so I could lower the entry some. Again, challenge number one is if we get in right here, we're still getting in with all of that resistance. You got all these upper shadows, so I still want to close. Someone somewhere is selling pretty hard at 73.80 on Ralph Lauren. All right, now that this candle came in, this is a pretty bearish candle. So now I can figure if we go in, if we break the high of this candle, that should be an okay bull entry. If we take out the high of this candle, the stop loss would probably be right about here. Right below the low of this candle. So I know all of you guys can calculate that R, calculate that risk, but just in case, 73, 63, let's say you have a $400 R, go. Who can get that fastest? $400 risk. How many shares are we doing? 7363 minus 7287, 76 cents, 526. I'm number 2. All right. So 526 shares long. Cool. So I'll set that trade up, ready to go, locked and loaded. If we break above this bear candle, I mean, that should be a decent trap for some bulls. Okay, so we haven't triggered it yet. Brett says on the entry above the bear candle, it's the candle size or the volume that caught your attention. Both. Rick says that would definitely take some margin. Let's see, 526 shares times 73 bucks is 38 grand. Yeah, okay. So if it takes a margin, it takes a margin. $400 R should imply that you have $40,000 in your account. So not really. If you have $40,000 in your account, this trade will only take $38,000 and some change. So nope, no margin needed, or at least not that much. All right, bull candle coming in, another bear candle. All right. So again, I'm trying to buy low. I'm gonna draw a little bit of a trend line in here. What I'm noticing is these candles have 1 penny from the exact same high. 1 penny from the exact same high. So if we were to break above the high of this candle, would some bears be trapped, you think? I think so. And the moving averages, I mean, they look okay. They're definitely flat here, but this one's still coming up. So I think some bears would be trapped, and that would still allow us to do 73.53 by 72.82. So now we could lower the entry and have the stop almost the same, which gives us a better risk reward. How many shares would that be? Oh, I beat everyone again, 571 shares. You see what I'm saying about the drilling? You guys got to beat me. Come on now, easy math. So 571 shares, getting above the high of this bear candle. Entry stop losses here. Hopefully I'll be able to increase the stop to there, and then eventually here, and I could lose small in the trade. That's always my goal. But this is a pretty strong bear setup. So if we roll over, that's fine. And if we break out, it should be an okay breakout, but I don't know. We'll see. Womp, womp, womp. Did we lose money on the trade, ladies and gentlemen? No, we did not. Why? Because we never got triggered in. We set up a predetermined price and said, okay, if it breaks above here, cool. So now we'll definitely say if it breaks above this bear candle at some point, that could be a pretty interesting entry. But for now, we're just going to keep waiting because it just keeps going lower. And it could keep going lower for a while. So next candle, next candle, next candle. All right, it's a bull candle. Interesting. Good volume. Still holding the opening candle. So that's the opening candle. Hasn't taken that candle out yet. So next candle, next candle. Oh, nice. Closed below the low of the 5-minute opening range candle. Type in a 1 if you would agree. Now, that doesn't necessarily mean that the trade's over. I mean, it could be. But if you're looking at getting back in, what we'll see is, here's the moving averages. We're below them. We're below them all. So I already know in order for me to get in long, it's going to have to do something like that. So it's going to take a while for that to occur. Because so for me to get in bullish, I have to wait till we get above those averages. So from here, I just wait. Okay. Did it get back above the averages? What do you guys think? It did. Is it following Mr. Squiggle so far? So far, it's following him. Okay, so we're back above the averages. Awesome. Now, can you also see a trap? Has a trap been placed? Yeah, so right here, this is where all the noobs went short. Okay. So I still want to get in above the high of this bearish candle, but now we're having a nice little consolidation going on. We have a little bit of a consolidation party. Now I'd put the stop right here below the low of this really strong bullish candle. This will be 72.80. So that's 72.43. 73.43 minus 72.80 equals 63 cents. 400 divided by 63 cents. 634 shares. Nice. Mike and Nick beat me. Beautiful. So you could do 635, you could round up, 634.92. So 635 shares. Thomas says that 3 candle pennant with volume after the trap. That's what I like to see. Oh yeah, that's beautiful. Look at that. Such a good consolidation. Very, very nice. All right, so we're consolidating. We're looking at getting in if we get above 72.43, but not before. So we're still sideways, we're still sideways, we're still sideways, we're still sideways. Do you see and feel the pressure building? And I love it. I can't wait to take a trade when I'm with you. All right, next candle. Wow, look at that bear volume. Beautiful. I like it. I like it when you trade it right there. So now, honestly, I mean, I don't know if it's going to go higher. Probably won't. But if it takes out the high of all that volume, some bears are going to be trapped. And then that allows me to lower my stop a little bit. You're still above all the moving averages. But now I can put my entry even lower. Because remember, on a bullish retest, you want to buy as low as possible. So that's 63 cents of risk, 400 divided by 63 is still 634 shares. So it's the same number. So I just dragged my entry down. Now my stop, again, same exact amount of shares. I should be able to eventually take my stop here and here. Do I know if this trade is going to do this? No clue. Could it do this? Maybe. I have no idea. But this is a lot of volume, and if it breaks above that volume, I think some bears will be trapped, and this should be an okay trade. Next candle. Oh, we're in. High of that candle was 73.31. We are in. So now I'm going to tell that trade, okay, it has to break above the high of this price. So this is how I determine if I'm going to hold a trade or not. Needs to close above in the next 15 minutes. So if it doesn't close above that resistance in the next 15 minutes, I don't think it's going to be a huge winner. Terry, that one should have filled, yeah. Stop is 73.31, the high is 73.31. So that one most likely is in. Yeah, that one's most likely in. Although, you never know with me, dude. But that's 38,000 shares, so that probably was me. No, I'm just kidding. I don't have 35,000 shares. All right, so Ralph Lauren doing its thing, hanging out. Cool. Did we close above that resistance? Yeah, we did. So that means I'm going to try to hold this trade for a while. I'm going to go ahead and move the stop because it did what I wanted it to do. And I'll move the stop right here. Just a few pennies. And then I'm going to do my absolute best to hold into this target, which is the new high of the day, or unless we get 4 big, strong bull candles in a row or something. So I'm going to move my stop like a few pennies. I'm going to put my target at the previous high. And we just got into the trade. So let's see what the next candle, inside candle, beautiful. Nice, nice, nice compression. Oh man, I hope this thing breaks up. How cool of a back trade would this be? Who gave me this stock? Was this, I don't even remember who told me this one. I was looking at the wrong date initially anyway. All right, here we go. Next candle. Oh yeah. Breaking higher. Ooh. Daddy needs a new pair of shoes. Now, those are 4 bullish candles in a row, but are they strong 4 bull candles in a row? Not really. So I'm not going to sell everything there because, again, I just got into the trade, number 1. Number 2, I needed to like kind of retest and then I'll move the stop up again. But the volume is nothing crazy. There's no massive volume spikes, and we just got into the trade. Now, my friends, could this happen? It will. Just keep trading long enough, okay? That'll happen. Could this happen? Yep. Keep trading long enough. That'll happen too. All of it will happen. Everything will happen. Everything possible could occur. All right, but I like the candles. I like the chart. I like the volume. Another inside candle. That's beautiful. Oh, there's your black candle. There's the retest. Now we're trading sideways. Inside candle. Boom. Sauce. There we go. Nice. Nice, 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 nice. Now again, I hope you all realize that this was entirely random stock. I did not choose this. This is not on my radar. Didn't trade it. This is the first time I've ever looking at this position. Did not know what it was going to do. No clue. I'm just following exactly the rules that I just wrote down for bullish retest gaps. Is it cool or what? Albert says no cherry picking. No, I don't even know who chose this stock. I had no clue. I don't remember. But again, this is the exact rules that we just talked about just a few moments ago. And they all, they had their thing. So we were waiting up here because, it was 20 minutes. And I remember I was trying to set up a trade over here and I waited and I set it up and then it just didn't trigger. And then over here, I set up a trade and didn't trigger. And over here, I set up a trade and didn't trigger. Remember that? Because remember, a lot of times people forget all the failures. Those were failures, in a sense. Failures to the extent of I wasn't technically, theoretically doing my analysis right or whatever. It didn't go higher, but I didn't get in, so I didn't lose money. Call it whatever you want. It's a win in my book because I didn't get triggered in, I didn't lose money, and therefore I'm winning. If I lose money and I lose less than an R, I'm still winning. If I lose a full R, I'm losing. That is not a win. That is a loss. Now, am I going to sell everything on this candle? Heavens no. No, that's the money-making candle. Look, I'm not going to sell a quarter. I'm not selling anything. Remember how I just said that I'm going to try to hold this position if it's going to close above this resistance in that 15-minute period? And it did. And look at this bearish candle. Pivot pattern, consolidation, resting, huge close, huge volume, closing up all this resistance over here. This is a hold. There's no reason to take a partial on this one. And my stop, I have already mitigated my loss. Shave bottom candle. Look at these moving averages. Look at that curve. Holding. This is going to hit the target. Watch. Would you guys be impressed if this hits the target? I'd be impressed. I don't know if it's going to happen, but I'm 98% sure this is going to hit that target. Unless it's August, which case I'll miss it by a penny. Oh! That's awesome. The best candle ever. Ah, that's so funny. Cool. All right. One candle can change everything. That's that's what happened in the stock market. Everyone's like, yeah, woo, making money nonstop. I'm the Fed Reserve, baby. Good times. All right. The other thing too is a lot of people probably move their stop up to here. So I'm going to have to hold through something like this, and I really hope it doesn't wake me out. But if it does, I'll attempt it again. Let's see. I don't know. Let's find out. I like that candle. It's really good. Brett says, I'm always concerned that if I don't get in above a hammer candle, I've missed the move. As long as it's not several candles in a row, do I need to not worry about it? Just keep practicing, man. That's all I can say. Because no, you haven't missed the move. If you don't catch the exact bottom, right? Go and watch my advanced classes, Brett, with the Elliott wave, right? If you don't catch wave 2, you still have wave 4. So yeah, man, plenty of time. All right, I do like how it bounced off the moving averages. That's good. It immediately bounced. I think this is what's called a 3-line strike. 3-line strike is one bear candle that takes out pretty much a bunch of bull candles, and it kind of bounces. I'm gonna leave my stop where it is though, and I don't know. Hope it goes higher. Oh, nice, nice. Okay. Well, type in a 4 if you can guess where I'm gonna move my stop to now. Yeah. I didn't get stopped out. I also did not move my stop where everyone else has their stop either. Okay. Stop's going to go below that candle. I love that one white soldier. I still think it's going to hit that. I still think we're going to hit that target. Let's see though. Oh, this is going to be tough. Oh no. Oh no. Oh man. The indecision on this thing. Harry Potter is helping us out, but we don't have much time left until the market closes, I don't think. What time is it? 12. Yeah, we don't have tons of time. So this is probably what I do. At this point, I've been in the trade, what? An hour and a half. Obviously, we can see that it's not working out amazing. It should have. It did everything it should have done, and then we got punched in the face by Darth Vader. Cool. Like I said, that's going to happen. Got all excited. Thought I was going to hit the target. Definitely did not. Should have. Trading 101. Moving averages are flat. So I'm going to do my absolute best to leave my stop here. Worst case scenario, I lose half an R. There's someone also buying this. I'm going to switch it to a 5-minute chart. So when I switch to a 5-minute chart, I'm just looking at how do the moving averages look. They look okay. I'm going to go to a 15-minute chart. We're probably going to get stopped out any second. And we did the absolute best we could. But if we can hold, I'll now switch to a 5-minute chart. And I'll probably walk away, honestly. most likely walk away on this one and go, all right, I don't want to watch this stop it. I don't want to watch this stop out. So I'm just going to walk away. And I'll come back. Wow, what a crazy stock. Remind me not to trade Ralph Lauren. All right, so I come back in an hour. And this is happening. Now, I will fully admit, everything that's happening right here is what will make you a profitable trader. You see how I'm practicing this, and I'm talking out loud, and I'm coming up with good scenarios, good, bad, good, bad, good, bad, good. I'm talking about moving my stop. I'm discussing where I'm at. I'm sharing my emotions. I would have walked away from this trade. I wouldn't even be here, honestly. And my stop would have stayed right where it was, right? Because if you moved your stop to here, you're now losing. You would have lost on the trade. You would have lost on a winning trade because you moved your stop too fast. Remember this, my dear friends, if you're learning anything from this back trade example. When you take a trade and you have your original 1 hour of risk, don't get into the trade if you don't want to lose the money. Right? So why, if you've already lost less than you're possibly going to win on the next trade. So in this situation, I mean, when I move my stop to here, that's an amazing job. Like if Matt DeLong hires me as a private personal one-on-one coach, he hires me and I say, Matt, you have one job, lose less than an R when you get the opportunity to. And he puts his stop there. Is he losing less than an R? Yes. Is he doing his job then as a trader? Yes. Am I going to fire him as a coach? No. He's in it. It's like all is good. It's okay. Now, Matt DeLong would not have done that. Matt DeLong would have moved the stop, gotten stopped out, and had to be vegan for a month. But, you know, it is what it is. Let's be honest. Okay, he has his medal hanging around his neck right now. Oh, man. So, remember, I had walked away, so I'm not here. You guys remember that? I've come back after an hour, and I see this. So what I'm going to do is I'm going to exit a partial here. I'm going to take a target off. How much am I going to get out? I'm going to get out of a quarter. Why a quarter? Because it's not really moving that well. But I'm also not losing on it. So I'm going to get out of a quarter of my position here. And then what do you guys think? Am I going to move my stop? Yep, now I'm going to move my stop loss. And again, I don't know what's going to happen to the stock. I'm going to put it right above break even because I never put my stop at break even. I'm either going to lose or am I going to win? I'm not going to break even. I don't work for no money. I volunteer. All right. I'll volunteer my time. That's fine. I'll give my time away to help someone, to enrich someone's life. I'm not going to work for free. This is work, man. When we're day trading, like we're putting in work. I'm putting in energy right now. So I'm going to move my stop. This is going to guarantee me at least minimum on this trade 0.2 Rs, which for me is $200. You know, and for you, it might be $20. It's irrelevant. It doesn't matter. For someone else, it could be $20,000. It really doesn't matter how much it is. It's irrelevant. It's about the process. It's not about the money. It took me a very long time to build that up and, you know, a lot of heartache and a lot of hardships. But at some point, you got to go, okay, cool. This is what it is. Awesome stuff. I'm happy about it. Great. And now that I have my stop loss, I know I'm going to win on this trade. And now I'm going to walk away for another 30 minutes. I move my stop, exit target. My target's still up here for the rest of the position. Okay, 30 minutes go by. I see this candle. I'm going to move my stop loss again. Right below the low of that candle, right below the moving average. Okay, there's the stop loss. And market closes in just a few moments. So I'm going to drop the target to here to try to get out at that high right before market close. Cool deal. I'm out. not bad overall. I mean, not the worst trade in the world, not the best trade in the world, but we did the analysis right. The trade that we set up was perfect. And then Ralph Lauren just was an absolute tater tot. But did we trade that pretty much as well as we could have? Yeah, and we still won the trade. It really would not have been a bad trade. I mean, that would have been, you're looking at about 0.68 Rs. 0.6, 0.68 is nothing to sneeze at. Stacking that wood. Bryson says, would you do a sell market order if it never hit the target? Absolutely. Yeah, pretty much right at the market close. When I did this exit right here, I usually just do a limit sell or a market out. Yep. Simon says, how often do you do an exit, a trade before the close? 100% of the time when I'm day trading, Simon. Every single time. I don't mess around with that, dude. I used to do that, and I would go in with I would go in too much size and just, nah. Day trade. Simon says, I mean, how often does it occur that you hold it so long? Oh, gotcha. I'd say about 7% of my trades look exactly like this. Yeah, that's really it. 7% of my day trades look just like this, where I get in like an hour and a half, 2 hours into market open, and I end up holding all the way till close. Simon says, good holding muscle then. Oh, dude. My holding muscle is one of legends, man. Have you heard of the Achilles heel? You might as well call it the Newsome thumbs. I can hold a trade. I can hold a trade. The funny part is I actually have very weak thumbs. If you ever want to like thumb wrestle me, you will win. I had a job interview at Nationwide Insurance once, and they said, what are your two biggest weaknesses in life? And I said, misspelling and my thumbs. And the person laughed. I was like, really? That's your answer? I was like, well, yeah, you asked me my two biggest weaknesses. That's my two biggest weaknesses. I can't spell for crap. And if you ever have a thumb war competition and you put me in it, you're going to lose. Or you're going to win. Like, I'm going to lose. Like, I can't. I don't know why. I have good grip. Like, I can hold a monkey bar. Like, I can rock climb. But the pressure on which my thumbs can apply to my index finger is like 4 pounds. It's really not good. I don't know why my thumbs are so weak. Anyway, random facts. Going back to day trading. So those are some examples. So now you go into your personal rules. Personal rules, of course, are what are you going to do per your trades and all that kind of good stuff. Right? So your R, 300. Obviously, choose what that is for you. Another rule, pick 2 days in a month where you simply do not trade. Take mental breaks. No one here loves trading more than I do. I'm sorry. You all probably love trading. That's great. But you don't love it more than I do. And you can love something. You can love your wife. You can love your cat. You can love your spouse. But sometimes you're like, I got to like not be there for a bit. It's okay to do that. Pick 2 days a month. Take a break. No trades. Mental clarity. Another rule, back trade every losing trade. Every single one. Every day. Another great rule, back trade at least 5 minutes before market open each day. You know, so if it's 8:30 Pacific, or sorry, 8:30 Eastern, you know, and or at night, let's say you are on the West Coast. I trade on the West Coast all the time. It's brutal, man, waking up at 5. But if you trade on the Pacific Coast, maybe your back trading is at night, 5 minutes before market open. This is a really good rule. If my position goes from a winner to a loser, back to a winner, expect to win small. Do not hang on for a monster win. It's unlikely at this point. Does that sound like a rule that we've used? I don't know, recently. Any idea when that rule is coming in handy? Maybe Ralph Lauren. The trade that we just took, the one that we just played, good old RL. Why'd you guys think I did what I was going to do? That's why. That's that rule. I wrote these slides. I know it. I know the rules. I did not expect it. That's why I said, okay, I'm just going to get on my target here. If it hits it, boom, I get 0.68 Rs. And I don't expect it to go moon Lambo because it went from winner to loser back to winner. So when it does that, I expect to win small every time. Am I going to get out of a trade when that happens and it's going to go to the moon and I miss out on $500,000? Sure. Why not? Of course it will. Am I going to do it? I'm going to get out at the exact high and it's going to tank and I'm going to feel like a hero and brag to everybody on Twitter. No one's going to care. Of course, that'll happen too. Right? Everything that can happen will happen in trading. So be prepared for it. It's exciting. That's why I love the market. Really, really fun stuff. Here's another rule. These are some more personal rules. If you had an emotional night previously with your significant other or kids, no trading for the first hour of the day. Or no trading all day if it was a really like knockout, drag out fight. You know, or if your cat Peaches climbed up the curtains of your house and peed all over your ceiling, you know, and you're all like, you have to clean the pee off the ceiling from cats. So if something like that happens, right, it's whatever. You get to decide, but that should be a decent rule. You can only flip on a position if the moving averages say it's okay. What do I mean by that? Again, remember we talked about CrowdStrike in the last module, module 4? And I said, hey, this is how I would have flipped it. Do you remember how the moving averages supported that trade? That's what I mean by that. Like if I'm going to flip a trade, I get into a trade and I was wrong, straight up losing, and then I go, okay, let me get out of the losing position and back into the winning. If the moving averages go, yep, that looks great, you should do that, and they're acting as a support, then I will get into that trade. Another really good rule, if you go up 0.9 hours or more in 5 minutes or less, exit all and regroup on the trade, especially if it occurs in the first 20 minutes of the day. That's an amazing rule. I do that rule at least 30% of the time every month. On bullish retest gaps, I get in very frequently. Bang, I'm in it. Zoom, it's up 0.9 Rs. I'm out. Bye-bye. And I'll regroup. Maybe I'll trade, maybe I won't. But if it happens in the first 20 minutes of the day and I go up 0.9 Rs in 5 minutes or less, guys, I got into a trade. It was up $1,000 in like 93 seconds. I was like, whoa. Sell. I took my limit sell, just dragged it down, automatic sell, get me out. Don't know what's happening, some type of news story, some type of flash. Let me capture the win, and I can regroup. Your average loss should be 0.7 Rs or less. Your max 5-hour loss per week, 10-hour loss per month. Some personal rules. And these rules, I didn't get a chance to make it look all pretty, so I apologize, but this is just putting it all together. So all I did is just collect all of those rules that we just had and put it on one page. If you want to screenshot it, go for it. I tried to make this pretty at the last minute, but I didn't get a chance to, and it's okay. Not that big of a deal. It's kind of like, honey, I did the dishes. I just, you know, I'm sorry I left that cup on the table. But anyway, so these are all the rules that we just talked about. All of them. If you're going to put all those together. Okay, so this is the gap must be clearing resistance at least 5 days. So this could be your bullish retest gap plan. This could be your plan right here with all these rules. And then you go practice, and then you go put in the time and the effort, and you back trade, and you get some, get some time under the charts and get your head in the game and all those other cool things that all people say to you. So again, let's go look at some more real life examples. Throw me another chart that you guys want me to look at, and I'll just run through the chart really quick for another 5 or 6 minutes or so. So whatever stock you guys want to look at, just throw it at me. Brett says SPY. All right, cool deal. SPY. So SPY on the 5-minute chart today, early morning, what was the moving averages? Up or down? Down, yep. Well, if we turn the extended hours off, what were the moving averages today? Up or down? So early in the morning, right here, were you going long on SPY? Right, all right, let me go back to the extended hours. Are we going long on SPY at the open? Hopefully not. All right, moving averages are sideways. You got a bunch of, I don't know what that blob is on the screen. But you have this massive wick. Here's all your pre-market resistance. So you got some resistance here. You got some resistance here. This is a 5-minute chart. So this is the very, very first 5 minutes of the day is this bullish candle. And look at this trap. Can you see a perfect trap on SPY? Look at those. Look at those noobs buying that. I mean, it's not like the market is not at an all-time high just a few days ago or anything. So again, I love buying the SPY when the market's down a little bit. But do you see how perfect those moving averages are? Do you see a really good bull candle breakdown to get in below that candle? Yeah, absolutely. Great bull candle right here. I mean, the very opening one. Solid volume. Here's another one. Solid volume, just short below both those candles. Here's your last attempt right there to get in. And then if you're going long, right, notice the moving averages. You want to get above the averages. This is where you get above the averages. Towards the end of the day, you're above all of them on the extended hours, and you're above all of them on the non-extended hours. What a clean, clean bull fade to end the day. Isn't that delicious? That is so pretty. So again, using the moving averages just as an example, that's a great one to work on, great one to practice on the SPY. Plus, you know, the daily chart, you had a giant bear candle and you were gapping down anyway, so relatively weak. Pretty weak. What else do you guys want to look at? Any other stock? JP Morgan, sure. Let's go look at JP Morgan. So the daily chart, what type of gap did the daily chart have today? Was it gapping up or gapping down? Simon says up. That is correct. Yep, I would agree. Did it clear pivots this morning? Yes or no? Okay, we have a few people who are saying yeses. Which ones? Which ones is it clearing? On this one, I would personally say I don't think it cleared any pivots. Again, I could be wrong, right? Everything's up to interpretation. But the main pivot that needs to clear is this one, because that's the high of yesterday. Now, these can kind of count, but if it doesn't clear the pivot from literally the previous day, then you're going to want a little bit more information, a little bit more details. You want more gaps. It needed a gap above here to be a great gap. Was it a bad gap? No, it just wasn't an amazing gap. Here's the 3-minute chart. Now, if you are playing it bullish, this is a phenomenal, phenomenal, phenomenal example. Phenomenal. Let's turn the extended hours on really quick. So extended hours chart, were the moving averages bullish for both time frames? Absolutely, right? So this is the extended hours chart. So come down bullish into there. If I turn the extended hours off, bullish there. So beautiful, beautiful move. It was a gap and go, right? Bear candle gapping up. It just didn't clear any pivots. That doesn't mean it's a bad trade, right? Remember, we talked about that. We talked about you could follow the same stock every single day. So it's not a bad trade. Could you have gotten in down here? And better question, would you and should you have sold right there? All right, so everyone's saying yes, you should have sold there. Why? Why should you have sold there on JP Morgan? So you have 5 bullish candles in a row, strong bull candles, new high, and volume spike. So it would not have been 2 R's unless you had a really, really tight stop. That would have been like 0.8, 0.9, 1, 1.2, 1.3, something like that. Entry most likely would have been around here somewhere. Stop loss would have probably been around here somewhere. And that would have been just a nice 1, 1.1, 1.2. Nice start for the day. First 30 minutes, boom, 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 locks in $1,000, not bad. Now, on this gap, you'll notice how we double top, close below the neckline, retest it, and now we're below all the averages now. So we're below all the averages on the extended hours chart, and we're getting below 2 of the main averages on the non-extended chart. Could you short that into the 50 and then short it once it gets below all the averages over here? Sure. Because again, now it's below all the moving averages on all the main time frames, non-extended and extended on the 3-minute. Cool deal. Okay. Is there a point in time where JP Morgan closes below the low of the opening range candle? Yep. So this is the opening range candle. There's the close below it. So if you're going to trade that one bullish for the rest of the day, it's got to get above all the moving averages. And there you go right here. Above all the moving averages on the extended hours chart. And here's the non-extended time frame right there. It gets above all the averages. What a nice little run in the late in the day, huh? Now, Jay Lindner says, I'm green for the day, so it breaks my rules to trade again. So Jay is saying if he takes this trade, he's up in the first few minutes of the day, he makes some good money, and he can't take another trade for the day. Is that a good rule that he could follow? Absolutely. I highly encourage you to have a rule or something similar to that rule. Some amount or some time frame. If I make 2 hours in the first 9 minutes of the day, I'm done for the day. Or if I make 3 hours before noon, or if I make, one of my rules is if I make 0.7 hours or less in the first 30 minutes of the day, then I'm done for the day. Beautiful, beautiful, beautiful stuff. Any other points? Anything else you want to talk about? Any other questions, ladies and gentlemen? JS says, why are the other 3 volume bars not spikes? They are all volume bar spikes. That is correct, JS. Every single one of them. This one is the highest. That's the biggest one. So could you have exited there? Sure, but you wouldn't have won very much. I mean, you could have, and I wouldn't called you pansy. If you exited there, I mean, it's only 3 bull candles in a row. You just made a new all-time high. You could exit a partial there if you want, increase the stop, or you could exit there, everything there if you want. That's fine. I probably would have exited there or there, one of those two. One of those two. But I mean, hey, if you exit there, absolutely fine. Not an issue at all. I just like this one because that candle closed above all the resistance. So to me, that's, if anything, that's a good thing. And you want a retest. That lower shadow, the next candle is the retest. And so that looks good to me. That looks like a clean wave. That looks normal. So yeah, I'd be selling on that 5th candle. Because so far, this one and this one just look normal. This one is just the beginning of the move. So that one's just where it's extended. I know it looks kind of perfect, but it works out really well. That's the thing, Albert, it didn't stop at 105. It went up to 105.21. You know? That's what you're asking, the whole number thing. So, I mean, oh, do I exit the whole thing up here? Yeah, definitely. Definitely exit the whole thing. Because at that point, my entry would have been there, stop would have been there. That would have been 1.2 R's. Yep, I'm out of the trade. Whole thing. 5 white candles in a row. Because remember, ladies and gentlemen, the reason I would have exited aggressively, the biggest thing to keep in mind, it did not have a good gap. It was just a it didn't do anything specific. It didn't clear any pivots. It was just your normal, average, run-of-the-mill opening gap. Nothing crazy or interesting. You still can trade those, but the daily chart was just subpar. So I'm not going to hold for anything amazing. Antoine says, is moving averages and VWAP the same thing? Not quite. VWAP stands for volume weighted average price. So it's based on the volume and not the price of the stock. We have a lot of videos on VWAP. I don't personally use it. I know a lot of traders do, but I always know where it's going to be. It's always right in the middle of the stock price anyway. So I'll look at it every now and then, but it doesn't really come into play for me. But we have tons of videos on it. Antoine, if you want to type in VWAP, real life trading, you can check it out. All right, folks, story time. This is how it ends every class we've done so far. Good old story time. And this story, a lot of people are likely going to know this person. So I'll just tell you her name. Her name is Angela. And Angela wouldn't necessarily call herself a day trader, but she is. She's a very, very good trader. She's a very good day trader. But I want to share with you what Angela did to get to where she's at. She's a part of real life trading. She's most likely older than you are. However old you are, she's probably older than you are. She's vivacious, stunning, smart, hard worker, intelligent, fierce, passionate, and very knowledgeable. And she was a god-awful trader for like 3 years. She was very bad. She'll tell you that. She couldn't trade profitable to save her life. And mostly it's because she didn't trust herself. A lot of women have a confidence issue in themselves. They'll know something, but they won't tell other people they know it, or they won't think they actually know it. And they come up with something called the imposter syndrome. And so they're like, oh, I don't actually know all the things I think I know. I have to validate it somehow. And I don't really know if this is all true or not. Even though I think I know what I think I know, I don't really know if I know it. Do I? And Angela dealt with some of that, but a lot more. And she was at a spot where she was really pretty financially strapped. She was trading with an extremely small account, less than $10,000. And she spent a few $100s working with me, doing some coaching. We worked together every week or so for a few months. And she would ask me really, really, really basic questions, super basic questions, just to make sure she got it right, to make sure she fully understood it. And then she would explain it to me. Okay, Jeremy, so what you're saying is X, Y, Z, X, Y, Z. And even though she didn't have that much money, she knew she needed to make this work. It wasn't an option of failure. There is failure, there is giving up, and there's an equal sign in the middle of those two words. And for Angela, there are so many other ways she could make money. She has other avenues that she could make, but she chose trading, she picked trading, and she said, I'm not going to stop until this is profitable or I die. That's it. Those are her two choices. Plan A, profitable life. Plan B, death. And so she was always in every webinar I taught. She was asking every question, anything that popped in her mind. She didn't care what people thought about her. If she had a question, she would ask it. She didn't care if it looked stupid. She would just ask, and she would try, and she would practice, and she would study, and she would read. And she spent some of her last amount of money to come all the way to Nashville from Canada, fly all the way down to Nashville, Tennessee, and came to a retreat, the very first one of its kind. And her and I sat down. We had a magical moment together where we sat down, and she goes, Jeremy, here's my financial plan. This is where I'm at financially. What do you think I should do? And I was like, Angela, I got bad news and I got good news. The bad news is you're already at rock bottom financially. You're already here. So whatever you're trying to not do, you're already doing it. Like you're here now. Worst financial position you can be in, you're here. So you're already at rock bottom. That's the bad news. The good news is you're still alive, you're still smart, you're still vibrant, and you do have some money. A little bit, a speck of money that you can trade with. And I promise you, Angela, it's not going to happen tomorrow and it won't happen next month. But if you grind slowly and you just lose your fear of losing your money, because where you're at, you've already lost it. You're already at a spot where you don't have much. You're already at rock bottom. So there's no need to fear it. You're there. And so she looked me in the eyes and said, I have a plan, but I just don't know if it works. I said, what's your plan? She goes, I trade 4 or 5 stocks. I buy some options on them where I think people's stops are at. And then I sell them when they're profitable. And I'm like, how profitable is profitable? She goes, I don't know. Sometimes I just watch it to see if it's green and I'll sell it if I want to. I was like, okay, cool. Sounds good, Angela. Let me show you the trade that she took today on Apple. Remember, her plan is I buy where people's stops are, and then I'll sell it if I'm profitable. This is the trade that Angela took today. Pre-market. This is the pre-market chart on Apple. Ginormous bullish candle, bunch of pre-market support. A lot of people, do they have their stop right there on Apple? Yep. So what did she do? She bought call options. Right? Why would you buy a put? That's where everyone's stops are. So she's buying calls. Buy to support. Where everyone's stops are, buy low, sell high. So she buys a call option expiring in October. Plenty of time. A lot of time on the option. Now, does she go all in there or does she leg in? Does she pyramid in a little bit? Does she take her whole account and buy call options? Does she take her entire risk and buy call options? No. She pyramids in. She goes, okay, well, if I want to buy 8 contracts total, I'll buy 4 here and I'll buy 4 there. If it gets down there. And if it does this, I win. And if it does this, I'll buy a little bit more. And if it does that, then I'll get out and I'll lose 3 or 4 R's. And if it does this, then I win. That's pretty much her plan. So she gets into some calls. She's happy. She's smiling. She's smiling. She's smiling. And she goes, uh-oh, that's not great. Bunch of people probably have their stops down there. Look how many bearish candles are in a row. Boom, 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 boom. I can't even count that high. Volume coming in. Huge volume spike. Big bear candle. Does she buy some more down here? Yes, she does. So she buys some more call options. She puts her stop in right there, right below the lows of those candles. And then she probably walks away or watches the chart for a little bit or whatever. And then she sells them right here. Why? Because she's profitable. Why not? And that trade made her 7 R's. So if her risk is $200, she made $1,400. That's it. That's most of the story. Angela took a strategy that she didn't think was a good one because she didn't have the validation. She didn't know. And I'm not saying that I told her the answer was yes. All I said was, Angela, every strategy works, not all the time. You are already at the place that you are trying to avoid. There's no need to avoid it because you're already here. Realize it. Understand you're here. Understand that you are an incredible, sensational human being. Keep in mind that you are in a position where you have to be grateful for all that you have in your life. You've lived an amazing life and have so many great blessed family members to be a part of this for you. And yes, financially you're at rock bottom, but in 2 years from now, you can be financially free. It's going to take you some time. You're going to have to lose your fear of making money. You're going to have to lose your fear of losing money. And you're going to have to realize that the only way to trade is to be there, to take the trade, to remove the fear, and to just don't worry about it if you lose money because you will. It's a guarantee. You're going to take some losses. I forget, 5 or 6 months ago, she had a 4 or 5 R losing month. And you know what she did? She had a coaching session with me. Even though she was scared to spend money, even though she was already down, what she was doing was blessing other people with her money, telling her body and her mind and her soul, money is everywhere. Money's not the reason I'm trading. It's about the process. I had a losing month. Let me go get it back. And then she's been on absolute fire. March, she did like 30 Rs. April, she did like 50 Rs. May, she did like 60 Rs. June, I think she took off the entire month of June and just traveled like Yellowstone or something with her husband. July, she made 40 Rs. August, I think she made 97 Rs last month. She doubled her account. It's mind-boggling. And she's older than you are. Is it because she's smarter than you or has more money than you? No. She's studied. She's put in the time. She showed up every single class all the time. If I was there, she was there. Anyone can do this at any age. You have to understand it takes a certain level of swagger, get some confidence, lose your fear, surround yourself with people like Angela and Sochi and Felicia and Nancy and Tracy. Some of the best female traders on the planet that I can possibly think of. Go surround yourself with traders who are better than you are, and they will bring you towards greatness. So my friends, I want to say thank you so much for being here. If you have made it this far, there is likely a chance that you might want to trade real time. Walter says the calls Angela bought are far out of the money. No, I don't think so. I don't think they're far out of the money. I'm pretty sure they were at the money. Out of the money options don't really move that well on short-term moves generally. So if you are here and if you have been excited and you're really fired up, you can trade live with Chief and Dale and Simon and Lisa and Mike and Lee and Jay, right? Everyone, the vast majority of people who are here are trading with us live. Go to Real Life Trading and click on Live Trading. If you want to trade with myself, if you want to engage in and be a part of the analysis that I can do after the market's closed, just wait to see what I can do when the market is open. I'm really, really good at this stuff. And I want you all to be along the journey with me and enriching lives together. So if you get the opportunity, join the team, join the tribe, join this sensational group of phenomenal people. Trade with us in the morning, trade with us in the afternoon, or do both. But otherwise, my friend, I really appreciate you enriching lives with us. Thank you for being here. Thank you for enjoying this entire session. I hope I brought you value, and I hope you can take this information and carve out consistent profits every single month. Thank you. And until next time, love life, live life, and trade it. You rock. Bye.